Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing a friend of mine, Joe Cavatoni of the World Gold Council. How you doing today, Joe?
Great, Darrell. Great to be here. Thanks for having me.
Yes, indeed. So obviously, I recently had on Michael DiRienzo of the Silver Institute. So it's good to talk with Joe of the Gold Council, the World Gold Council. I know you both had a lighthearted debate at PDAC at PDAC, and so
That's right.
it was good to see you both on stage. So I'm curious in your overall perspective on gold and your outlook there.
Yeah, look, I know that we were speaking at PDAC. Things were live and happening around the globe in terms of geopolitical issues, trade-related issues, conflict in the Middle East. Um, but we did talk about a couple of key points that I think are worth reminding everyone. Number one, the first and foremost thing that people need to make sure they understand is as a global asset, gold is definitely playing a role in many people's portfolios on the investment front, and central banks are still very active in the gold market. That tactically is leading to a lot of price movement, volatility, and actually swings in our price. But the other thing that we highlighted at PDAC, which I think differentiates us a bit from silver, is that the structural shift of why gold matters in economic terms as a monetary metal unrivaled by others, that it's going to continue to be on that steady interest level from a investor, central bank, consumer, and economic consideration perspective. So we see a lot of conditions that are still very strong for gold's role to continue to be very strong in the portfolio allocation.
Okay, got it. So thinking about the strength and the fundamentals of gold,
Mhm.
how are you looking at? So recently, the bond yields have been moving up. Gold's been under some pressure, as well as
Sure.
other assets and such. Obviously, oil has been catching a bid, and typically, when oil goes up, it does have major impacts for the economy abroad. And so, curious in your thoughts on all of that and its impact on gold.
Sure. I think we had a culmination of a few events that came together really almost at a perfect time to create some really interesting movements in the markets. You talk about bond yields, you talk about the rate environment. That actually is a consequence of something that developed in the Middle East. So as the U.S. entered into this conflict with Iran, and there's unclear pictures on exactly how long this is going to be a conflict in play, that's having a substantial impact on the oil price. That oil price is having major impact on economies around the globe. It's a very, very prominent asset and commodity as it relates to gauging whether or not a country will be subject to inflation. And I think that we feel it a little bit here on the home front in the US at the pump. But I think if you start to unpack what limitations on oil could mean to broader emerging market economies, which are really heavily dependent on oil for growth of their economies and actually their primary energy source, you'll find that there's significant concerns around the economic conditions there. So, as a consequence, the Fed, amongst other central banks, talked about a significant concern around the resurgence and stickiness of inflation. They made a decision at the Fed not to cut rates. That's actually benefited the bond market at this stage. That's always a headwind for the gold market. But we need to see how this continues to develop because those geopolitical moments have impacted gold favorably, negatively. Now we need to see how this plays out because when we get through that moment of understanding the real implications on inflation, we think that the role that bonds play in a portfolio and their correlation to equities will continue to be highly linked, and the gold market will actually be favorable as a diversifier, that unique position that it holds in the portfolio. Right now, I think all risk assets and also assets like gold are all behaving similarly. People are selling, people are reshuffling assets. But once we get through this period of uncertainty around the length of time that the conflict exists in the Middle East, we'll get much more clarity around exactly what that direction looks like.
Okay, got it. What are your thoughts on uh, countries around the world are increasing their military budgets? And I think there was an article about Poland selling some of its gold reserves and increasing its military budget. And so, do you see this as a trend? Is that like kind of a one-off situation where countries are feeling the need to like, okay, we need to make sure our military is strong. We need to liquidate whatever assets we have to ensure that and increase that budget. And so, just curious if you have any thoughts there.
Yeah, I think what we tend to analyze and keep a track on is really the factors that central banks highlight to us as to why they have gold in their portfolio, in their reserve assets. And actually, what we're hearing, Poland is a good example. I wouldn't necessarily say it's a wide ranging example, but it is a good example of a central bank that's grown its reserves in gold, but has signaled that it has domestic issues as much as it has any other factors at play around sanctions or seizure of assets or whatever the case may be. They're going to use gold for domestic issues as well as international trade related activities. So I think it is signaling that central banks understand the asset, need its liquidity, and they'll make use of it. We're also hearing definitively from markets like Tanzania and Ghana that they do have an interest in selling gold. They are selling gold. But you also hear most recently, Turkey is looking at what it can do with its reserves as it looks to shore up its currency, but also just basically looking at what it needs in terms of its war chest of cash in its pockets. So I think if they see the gold asset performing well, which it has, they see an opportunity to take some of that profit, use it strategically amongst how they can within their country borders. I think that it signals that it's playing the role that we want it to. It's actually a key component and actually something that these central banks can rely on. I think what we're not necessarily getting a good signal on right now is whether there's a shift in opinion away from gold by central banks. I think it's quite the opposite, that central banks still are signaling that they see, recognize, and are going to continue to use the asset and add to their reserves. But I'll remind everyone that we have a survey we do on an annual basis. That'll be out in June. It'll be really interesting to see what they're signaling for us mid-year in terms of their overall outlook. And our suspicion is that it'll be continuing to look to gold as a diversifier.
Okay. What are your thoughts on liquidity? So obviously, when gold sells off, typically investors, institutions, they're trying to get liquid, especially with the amount of volatility that's going on in the markets as a whole. And just any thoughts you have there on, folks are trying to get dollars and de-risk, sure. and gold is kind of like, selling off because of that, right?
Yeah, that's been a factor for sure. We have a couple of factors that have put us into the sell category, so to speak. High returns, profit taking, margin calls on risk assets, and gold being a liquidity source that can be used for that. And also, ultimately, some speculation where people are trying to make a call on what gold should be doing in the event of a conflict, in the event of some sort of move on the part of the Fed to either cut rates or not cut rates, signal their outlook for the economy. So a lot of those factors are weighing in. I think the gold markets performed as expected. I think the liquidity has been tested for the gold market. We have lots of gold that trades on a global scale, but you have to just make sure that you're understanding where you're able to access that liquidity and getting it at the right time. I think that the market's seen higher levels of volatility as people have been very aggressive to position around gold. But it's very interesting for us to see now that as we come back down towards the 4,500 level as we record this, that we're starting to hear about people stepping in and seeing opportunity to continue to get back into the gold market. But you're right to say that gold's a source of liquidity, and it has been over the periods of time when risk assets start to really move, and that's what we've been experiencing. It's been a contributor for sure.
Okay. Any thoughts on the so there's been a few charts that have been circling around about the discoveries of new gold deposits, and in the past couple of years, those discoveries have fallen off a cliff. And so just curious in your thoughts, any thoughts there?
Yeah, I think the discoveries that we hear about and a lot of these announcements around large stocks of gold, they come to the market, but I think that people need to keep that in mind when they think about the timeline for this gold to come online. If there's a large deposit that is discovered, the first thing we have to understand is whether there's an accuracy to it or not. And then the second thing we need to understand is how quickly can that come into the market. Projects to bring new gold out of the ground. And then what we've been seeing on the supply side for us has been a steady but small increase in the overall supply side for gold of around a 1.5 to 3% rate of growth. And we continue to see that it's going to stay in that range. Some of these new, quote, fields that people are talking about, if they come online, it could be as long as 10 years or longer before they can actually have an impact. Getting a mine site up and running doesn't necessarily happen quickly. And actually, in many instances, permitting processes can take even longer than that. So while it's interesting to keep an eye on it, I think it's not necessarily going to be immediately impactful for what we're seeing and what we're feeling in the gold market today.
Okay, got it.
There are one point to highlight on this. What I think might be interesting at these higher prices is when mining companies have maybe a mine that they've kind of slowed down on or shuttered because there hasn't been enough demand. Those might be sites that can actually come online. They also have brownfields that they could actually bring back to life, and more activity in those types of areas. That's something that we think is a little bit more interesting for sure in terms of the mining side.
Okay, got it. So any thoughts on, so obviously silver, has gained a lot of spotlight since it had its historic move upwards. I mean, silver right now from its January highs is almost down about, 40, close to 45%. Compared to gold. I mean, gold's down. I'm just doing it on the charts right now. I'm looking at gold. Gold's down about 21%
From its peak.
From its peak. Yeah, 20% from its peak.
Yeah.
And so obviously silver is the more volatile asset. And so just thoughts on gold versus silver.
Look, I think we've both the silver and the gold markets have seen an increased level of speculation, momentum trading, and a lot of excitement around what the possibility could be for these assets. I think that the gold market is actually still has a very strong fundamental case and a very rational case for long-term growth as a consequence of monetary and economic conditions. I think that with silver, what we would remind people of is definitely it's a smaller market. Definitely it has use cases that people should understand that are industrial in nature. And be careful because the liquidity size of the market is definitely less than gold. And actually the momentum swings that you should feel, which you've just highlighted with the numbers, will continue to be much more potentially impactful. We see a good, strong case for the gold market. We think there's an interesting case for silver, but it is going to really be fundamentally driven by that industrial utilization and how it can be woven into the critical mineral strategy of a number of countries, including the U.S. So I think interesting that both precious metals, interesting they played a role in monetary roles in the past, but gold is that monetary metal of choice. So understanding the economic conditions that impact money will help you understand gold. Making sure you take into consideration the industrial use for silver will help you understand that market.
Okay, got it. So just referring to the recent publication from the World Gold Council. Be sure to go check out gold.org. You all, if you aren't subscribed, they put out a lot of research regarding what's happening in gold. And so this first chart here is gold has delivered strong returns, but at a much more consistent pace when compared to silver. Yep. And so here you see the gold bar being representing gold and the purple bar representing silver. And you see, even though silver had a huge outpaced gold in 2025, you still see that gold has outpaced silver over that longer term period. And so any thoughts on this chart?
Yeah, I think this chart does a really good job of representing the people. And if you go back even further, you'll find that the 8% growth that we experience in the case of gold is actually linked to conditions that are linked to growth of economies, growth of savings, growth of risk and uncertainty, and allocating the portfolios. What this is telling us is that there's been a lot of speculative momentum trading that stepped in pretty substantially into the case of silver. And I think that right now, the gold market has that strong case of growth over time. And it's really driven by different factors. And I think that chart does a great job of saying, hey, look, it's a smaller market, so speculative interest can have much more impact in the silver market versus gold. We had a bit of it, but I think it's been less impactful because it's much more substantive. But I think that's what really is key. The difference in the size of the market and the use cases for gold versus the silver market give us a much more stable return profile.
Okay. So if someone were to bring up the supply and demand nature, so obviously this article is about the cyclicality of silver and its industrial use.
That's right.
And so here I'm looking at this chart where it talks about gold production being more geographically diverse.
That's right.
So you see that gold has more diversity in where it's produced. But wouldn't this be bullish for silver in some ways? Because when you think about the supply demand, we're already at a 780 million ounce deficit. And so it's hard to find good ore grades as well as it being a byproduct. All those talking points, I mean, all those arguments that I'm sure you've heard. And so do you think that gold being more geographically diverse and silver not having as much diversity, is that more bullish for silver?
I think it concentrates the concerns that you might have with silver. I think what you get with a diversification profile for gold, not only on the demand side that's global, and we talk a lot about this, you and I've talked about this quite a bit as well, but you have China, India, Japan, all growing investment markets hitting record flows in terms of ETFs, but also in physical demand. You have supply coming from different natures, different national locations. You really have an interest in the gold market that's global in nature and not concentrated. So if you have an exposure that's a concentrated exposure from the main source of where silver is coming from, could leave you with quite a bit of challenge. While it might do a little bit to bring that scarcity issue to light and maybe give you a higher potential for reaction when demand increases, it concentrates the exposure. So, for example, Mexico is a large supplier of information or assets for the silver market. When we had challenges around negotiations between the U.S. and Mexico, it had a major impact on the questions around the supply coming in from the silver side. I think it leaves silver with a different risk profile than it does with gold. If there's a challenge in one place in the gold market, like we had Russian gold that was being mined and actually shut down for the world to be consuming it, and we didn't see an impact in terms of the overall supply that was coming online. It actually was well absorbed because of the diversifying nature of how we bring gold to market, whether it's from Africa, from Asia, from South America, Canada, the US, or wherever.
Okay, got it. So there's some recent headlines about Russia, halting their gold exports and such. And I'm curious. I'm sure this came across your desk or whatever. I'm curious if there's any implications from that. Is that a nothing burger, or I'm kind of just trying to figure out how significant is that?
It's hard to say anything that's related to Russia as a nothing burger. I don't know if I would necessarily characterize it that way, but what I would say is that I just made reference to the fact that when the gold from Russia was being, analyzed and then eventually sanctioned by, the largest nations in the world, the US, Europe, the UK, it wasn't impactful for the performance of the gold market. Yes, it's interesting and important to understand, but the market's big, the market's diverse in terms of its sources and its uses. So I think that you just need to make sure that you know what's happening with it, but I definitely don't think it's been something that's been negative or impactful to the market for what it is.
Okay, got it.
George and his team, a 16-year VRIC employee building some of their largest mining operations on the planet. We started a drill campaign, from the drill campaign moving into a full engineering report and study. We came out with our pre-feasibility study in 2021, and it showed a really impressive economic case for advancing the project. We'll have final definitive feasibility out in December of this year. So in the space of 4 years, fully engineered, fully permitted. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
any thoughts on the recent volatility? So we've had like these, I think at one point it was a $2 trillion swing in the market cap of the metals in recent days and such. And so, some people may be thinking like, oh, gold is, the safe haven and such. But then when you have these huge swings and within a short amount of period of time, people are comparing it to Bitcoin or crypto. And so is that more speculation? Does that show that there's more speculation and weak hands in the market, or do you have any other analysis of what's happening there?
I think that we track on a week-to-week basis what are the driving factors. Momentum's definitely been on the rise in terms of a factor that's weighing in and driving the gold price. We think that there's probably been more momentum and speculation than even we're tracking in terms of the overall impact on the gold market. But let's unpack this for a minute, because I think what's dynamic about what's happened in gold that's interesting for people to understand is that slower moving ways for people to own gold. When I say that, I mean when you buy and hold jewelry and try to sell jewelry to kind of monetize it, that's a slow moving market. We've had a significant amount of growth, not only with central banks, who are often buy and hold in terms of what they do with their reserves, but we've had an increase of global investors, and they'll move appropriately to react and respond to market conditions to maximize portfolio returns. So one thing that I would encourage people to understand is that likely the levels of volatility we experienced before this shift, while they're lower, they might not necessarily be what we should be expecting from gold going forward. I'd also caution to say that gold has a level of volatility that's reasonable, and it is, yes, a place to be during a safe haven need, but it also is like every other asset. It's got movements in the price that are regularly going to be impacted. So I think investors are actually much more astute to understanding how gold fits a portfolio, and they're much more active. And being such a large market, we get all kinds of investors to the table, including hedge funds, including speculators, including people who are looking very excited at short-term opportunities. The fundamental difference between us and a Bitcoin is our use cases are quite clear. And overall, we've had higher levels of volatility, probably expecting that to stick around for a while, because we're dealing in a global economy and a global geopolitical landscape that really is, I mean, you'll appreciate this. It's just unpredictable in terms of what's happening day to day, and announcements around where the administration in the US, for example, is going to go with trade, with tariffs, with conflict, with moving around the globe. It's very, very, very challenging. So we're seeing higher levels of volatility for gold. Silver's seeing higher levels of volatility, but guess what? Equities are seeing higher levels of volatility. Bonds are experiencing the same thing. Every asset's changing in terms of its nature under this kind of condition. And I'd say that gold keeps its liquidity right there where you need it. And ultimately, we've been impacted by momentum, but I think that the fundamental case, like I've said before, it's a global case for a growth of economy, and I think that gold fits it.
Curious if you have any thoughts on the S&P to gold ratio. So, I mean, there's also other ratios, the gold to Dow ratio and such. Many people are expecting the equities to roll over more significantly versus gold. If you look at the chart of the S&P to gold ratio, it has not made new highs since the .com bubble. And currently it's been rolling over. And just thoughts on the broad equities versus gold.
Yeah, I think that this is a really interesting topic. And what I'd say, and I don't necessarily subscribe to the different ratios that people use. I know that they can be useful, but the way I see the world and the appetite for risk and risk assets, I think there's been a very significant appetite for risk, and actually having the ability to offset that risk and manage that risk in a cost-effective way. That's where I think we're starting to see gold's role really in these conversations with investors pick up and play a more interesting component of those discussions. We're being included amongst those that are talking about risk assets, equities, bonds, as a component of real assets right now. People are looking at those ballast type assets that can be brought into the portfolio. So my sense is, and we've had a view on our outlook regularly for the last 2 years, that there's a moment when risk assets are going to be coming off those frothy highs that we think that they've been experienced. And I think that that's going to be a good moment for gold. While we have had price pressure, I don't necessarily see us having significant unwind pressure putting us further back than where we are. I think quite the opposite. I think as people start continuing to look at those risk assets, equities in particular, and realizing that they may be still frothy, we'll see gold continuing to be an asset that's bid, again, on a global scale. Remember, this is actually the most interesting thing about gold. You've got to make sure you understand that Chinese investors and Asian investors, they're looking at gold the same way that people are in the Western markets. How do I fit it into my investment portfolio? And what is happening with equities in that part of the world as well? So these are all interesting discussions, but those frothy equities are due for a reset.
Okay, got it. So curious in your thoughts on, I mean, you've been in the gold sector for a long time, and I'm curious in your thoughts, are we seeing anything new in the gold markets that you're having to kind of either change your models around or whatnot, or is this pretty much like standard things that have happened in your experience in the gold sector?
So that's a really good question, and probably the thing that we're giving the most thought to about what needs to be really well understood as we calibrate our models, because models are what they are. You know, my colleagues and I, we talk about this regularly. They're helpful tools, but they're not, they're not going to be a crystal ball. But the factor that we're dealing with that's quite interesting is how do you really anticipate and measure up the geopolitical events and the geopolitical trade-related tensions that could be created. And I think we're living at really good times to kind of amplify this right now in terms of the just unpredictability, like I mentioned, around what the administration could do, say, or impose. And that's hard to model up. And that's where I think we're giving a lot of consideration to what and how should we be factoring that in, and how should that be understood as we reach a new potential structural shift in the gold market. People are saying, hey, we looked at, we're well overpriced in terms of fair value, but that's based off of older models with older regimes where there was a lot less volatility to the behavior of the administration and other governing bodies. You're looking at things that are actually new and different for the foreseeable future, and they're going to continue for the next 2-3 years. So we're wanting and understanding that aspect of the markets and trying to figure out how should we be reflecting that more. A lot of that's playing out in what I mentioned, momentum. Like, were those factors properly being captured in our modeling, and are we really reflecting the reaction to that appropriately to say, hey, that's a short-term tactical impact on gold? And that's where we're trying to get ourselves better educated and really trying to make sure that we can unpack this for people to give them the best information we can on the market.
Okay. Another big topic that has been floating around over the past year is the United States potentially revaluing gold or, backing bonds by gold and such. And so I don't know what to think about it. I mean, I feel like anything's possible, but I'm not sure of the likelihood of some of these thoughts or narratives or whatnot. And so just curious if you all are looking at that, or is that something that you don't really pay attention to?
So we do pay attention to it. We operate in the world of what we know and what we're being told is going to be happening. And there's a few things that I think that have actually come across our desks and everybody's media coverage that are actually worth highlighting. There was at one point in the previous Congress, and I don't think it got reintroduced into this Congress, and that was a proposal to monetize the gold that the U.S. holds in its reserves, which is roughly estimated at around 8,100 tons, the largest gold reserves of all central banks. It was talked about monetizing that and potentially buying Bitcoin. But that legislation never made it past draft form. So that's one fact that we do know. We also know that the U.S. has a policy where its valuation used on its gold is not completely reflecting, if at all, the current level of its pricing. But I don't know if the U.S. is necessarily concerned about that. They do represent that they audit and they inspect their gold on a regular basis. But I think that moving away from that mark is something that's been rumored, but we haven't had any official or formal announcements of those types of activities at this stage. And then lastly, I think around how you could use gold as a standard for backing a bond or going back on the gold standard. Again, those are ideas that have been kicked around by a few people who have either been in political circles or actually circles that are actually close to the administration, but nothing has been formally announced on any of it. And I think that those could have interesting implications economically, but they could also have big political signals. Looking at a bond that could get issued by the U.S. backed by gold would send a signal around what they're saying about the quality of the credit that they're usually issuing without any backing of gold. And it actually could have far-reaching implications without, giving a lot of consideration to what it could mean. So I think that we haven't had anything formal or anything official that's been announced. What I think is interesting that the administration has made clear in a world where we're dealing with critical minerals, for example, silver and copper, which are now critical minerals in the U.S., the administration has said, hey, we deem gold to be a strategic asset. So it's not a critical mineral, but it is in their mind something significant. So we're seeing permitting, we're seeing mining and actually activities around the gold market included in all those priorities for critical minerals.
Okay. And then lastly, last topic I want to touch on is tokenized gold.
Yes.
How significant is this? I know that there's a push towards these. There's some recent legislation that I guess something around the stable coins got interrupted or whatnot. I saw some upset people on that particular topic. But the real world asset tokenization is something that has been gaining more steam and such.
Yep.
I mean, we've seen Tether, issue gold tokens and such. And so curious in the Gold Council's, World Gold Council's thoughts on that.
Yeah, look, we see the future of digitization as vital for all asset classes. But what we also see is an opportunity for us to do a lot of heavy lifting on our side with the industry to get the gold market better positioned so that it can actually be dematerialized into the digital world a lot better. So you mentioned Tether, PAXG, MKS PAMP through DGLD. There are existing tokens that are out there today, but their uptake has been limited, is what I'd say. And it's limited because the use case isn't very clear. Now, there's a natural affinity for crypto people to be operating in their circle and their opportunities to actually own a bunch of different assets, but they haven't necessarily seen a use case for gold. But if we want to digitize gold, I think the things that need to happen on our side in the gold market, we need to get the wholesale market trading a lot more fluid and liquid. We need to have the understanding that gold as a service, so to speak, and we've just put a piece out on this, which is really interesting for people to read. We think that the industry needs to be better connected with movements of gold, storage of gold, the costing, all those different aspects of the gold market. And we're actually putting it to the industry saying, hey, look, it's a call to action for us to get that side of the table much better organized because the tech is ready and the tech's there if we want it. It's really the mechanics of how you want to agree to operate in the gold market. Are you looking at London gold delivery, big bars? Are you looking at kilos? What else is included? Those are the factors that need to get wrestled down. So we think the industry needs to keep working on its infrastructure to get it better suited to be better tokenized to the end users that they're there. It's just they need to see a better use case from that market than they see today.
Okay. And I'm kind of wondering about the accessibility of taking delivery. So I haven't researched much about Tether's gold token. I know that the price that they have, it does kind of introduce like a 24/7 kind of way that you can look at gold. So when we've had like these geopolitical events happen on Fridays or over the weekend,
Saturdays and Sundays.
When the market's closed, like people would go refer to this Tether market to see, okay, what's happening with gold overnight? Is gold on the rise? Can we expect a move upwards on Mondays?
Right.
And then also I'm kind of wondering about the, taking possession of the gold. So like,
Sure.
if you have a retail investor, so right now when you buy, I think the Sprott your physical gold trust, you have to pretty much be an institutional investor to take that delivery,
Yeah.
and so I'm kind of curious if how accessible it's going to be for like the average
Yeah.
person to take delivery.
So first, let me make a comment on that Saturday night. We've had a few laughs on our side as we've talked about tokenization, and we said who's going to want to cover Saturday night when the markets on the crypto side or the tokenization side are trading, and don't have a lot of people putting their hands up. But all joking aside, what I think is quite interesting is whether or not there's enough volume, whether there's enough interest, and whether or not there's enough activity in that space to say that's really what the gold market will do on a Monday morning when the wholesale markets open up in China and Asia and the Middle East and then into Europe and London. And I don't think it has enough right now for me to look at that and say that's a proper representation of exactly what's going to play out. I'd say to people it's interesting to see what's happening there, but I would also say that's probably not the place to go to get a gauge of what gold would likely do come a Monday morning when the real markets are back open. And actually, it leads to the other point that you're talking to, which is access to the gold underlying the token. The key thing on any wrapper, any instrument, any asset that's going to give representation to the gold market, it has to track the gold market and be physically backed by it or correlated to it appropriately. So what I mean by that is like in the case of an ETF, the gold ETFs are all physically backed by bars in the vaults. And in the case of tokens, they need to construct them that way. So levered and inverse and these instruments that don't necessarily have the gold there, they're going to deviate away from the spot price of gold by a number of different factors. And I think that they need to start with that. And the tokens we've talked to, they do back themselves with 100% gold. And actually, some of them make it available. But like in any of these products, people don't necessarily feel the need to use the product to get the physical. They'll simply go to the physical market to make it happen. And so it's an interesting element. The key there is right now making sure that whatever you're buying is fully backed so that it does track gold, and whether or not it leads to a world where there's total fungibility between the underlying through the wrapper or not. We'll see how it plays out.
Okay, got it. Yeah, thanks for sharing that. So if investors that are watching the show go to gold.org, what can they find? I know that a lot of your mission is to educate and to give access to information to many different retail investors, institutional investors, and such. So what can people expect from visiting gold.org?
Well, I think I would direct them first and foremost to Gold Hub, because that's where we're producing the regular content that we have around what's happening in the market and how to understand that information and make the most use of it. That plus getting into who and how you're accessing the gold market, whether it's a retail dealer or an asset manager, you'll be better informed when you make those calls to have the discussions around what's going on in the gold market. In addition, Darrell, what I think is important for everybody to understand as well, we do a lot of work around standards and best practices. So we have invest.gold, which is a sub page within gold.org. And I would say people should understand buying behaviors, suggested approaches to asking the right questions when making a decision to buy and sell their gold. So those are two things that I'd say. Lots of information to better inform you and information around how to better prepare yourself for the moment of transacting. Those are the two areas I'd focus on.
Okay, sounds good. And where can people follow you? I know you're active on X. I know you have a podcast as well where you put out some episodes and such. Where can people connect with you there? Or
so you can find our podcast on our website, gold.org. You can find it's called Unearthed. John Reed and I, my colleague out of London, we co-host the program. We've got a regularly scheduled monthly podcast that we produce. We've got regular guests, both audio and video. So we would encourage people to check out the content. The monthly is probably the piece that'll be most interesting because we're talking timely information around what's happening and how we're seeing the world. And that's actually a good place for people to get onto the pulse of what we think about what's happening in the gold market. And that's the beginning of every month. So we'll record one for April in the coming week here. But I also think that there's a presence for me on LinkedIn. There's a presence for me on Twitter, as you've said, and actually some of the content that I produce as well in terms of thought leadership pieces and the like. You can find that on gold.org as well.
Okay, sounds good. Well, thank you, Joe, for coming back on the show. Look forward, or coming on the show. You've been on my my other show, the Money Level Show, and so thank you for coming on to VRIC. This is your first time here, and good to see you again. I'll probably see you in Boca or something, I'm assuming.
I'm sure we'll see you on the circuit, but for sure, we look forward to being part of your programming and welcome the opportunity to come out and share our views on what's happening in the gold space.
Yes, indeed. And you all hit the subscribe button if you haven't subscribed yet. And thank you for watching.